but all of that market were off. Even gold was down on Friday. That's because of the holiday. But today they are moving, except, for example, for I think DAX. DAX is not moving today. The way I'm looking at it is just kind of like, let me confirm something from you guys, or for you guys. To confirm if DAX is actually moving. So today is, definitely DAX is not moving because the last move of price was on the 17th, and today is not 17th, today is actually 21. So which means that DAX is not moving today. And of course, but I think US 100 is moving. I think so. Yeah, I even know so because I woke up in the night and I checked it, and of course, it was actually moving. So today is 21, US 100 is moving, and Euro USD has been very, 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 very upbeat, as well as gold. Okay, they have surpassed, all surpassables, right? Gold has been very, very, surprising on the chart. So I want to believe that some of you are taking advantage of that, if not all of you. Okay, so Nikkei, you're welcome. That's Nikkei Adibu, Nikkei. This Nikkei people are most likely from Abeokuta.
Your screen, share your screen.
I will. Don't worry. Relax. We are still gisting. We are still talking. Okay. I will share my screen. Now, who do I call now? I've seen quite a number of names. So let me mute you guys so that even if you want to talk to me, you just have to kind of like drop a message. So if you want to see anything, right? Greeting or anything, just drop me a message because I'll appreciate it. So on that note, I'll share my screen now because we can have a look at what I've been looking at. Okay. This one. I've been looking at this screen that before I even started this class at all. I've been looking at this screen. And because I have in front of me, I have about 4 screens in front of me. Okay, so that of my phone and 3 laptops. So those are the ones I've been looking at. That's this laptop now that you're looking at is just one of the 3 laptops I've been looking at. So when I say gold has been moving and surpassing tables, it means that I've been looking at a different screen from this one. Okay, so let's look at the one we're looking at right now, which is the one you are seeing. And of course, you can see that Euro USD is on it. It's the only chart I have open on it. Okay, so last week, I think we analyzed quite a number of instruments on Monday that I was with you guys. And we bought oil then, I think so. Of course, oil made money. So we, at least for me, made money. Okay, so let's look at what we have for you today. I can't even remember what else we bought that before. I know we bought something else or sold something else, and of course, that one also made money. So let's go to, let me see if I can open Euro Pound, this one, and look at some other currencies like USD CHF, which I've not been trading for a very long time. I've not. Okay, and USD and as well as which other currency we can look at? GBP USD, as well as which other one? Okay. On that currency, we could also look at AUD USD. So all these currencies that I opened, about 6 of them, look at it together. And then we'll look at NASDAQ, under NASDAQ. And then we look at maybe US 30 also. Then we look at crude oil also. Then we look at wheat also. Then we look at, so wheat has actually been doing well. We look at gold. Okay, so I think I have about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So let's make it 12. Jesus disciple, right? Let's make it 12 instruments to look at today. So we could just look at maybe another currency different from the normal one, like maybe GBP or something. Right? So let's look at these ones today. That's about 12 instruments altogether. Let me pack all the currencies together so that we look at them at a stretch. And then we'll move to indices, about 2 of them. And should have been 3, but because DAX is not working today, that it's not floating. So we just keep that. And then we look at commodities, like 3 of them, crude oil, wheat, of course, gold. So let's start with Euro USD, right? I think we now have about how many people in the house? 35. Good. So it means that the class will actually, Now let me look at the comment that somebody dropped. It was a greeting. Okay, so greeting from Ola Adeyemi Olalekan. Now let's get started. So I'm looking at about 12 instruments today. If what I look at this, what you would have loved for me to look at is out of this 12, it's all good. So when I'm done with this, drop it, and of course I will look at it. Let's start with Euro USD. Now Euro USD has been upbeat. Like when I say upbeat, it means that it's been bullish, right? Okay, bullish in the sense that the price has been going up non-stop. Okay, every attempt for sellers to come into the market is actually being, reproved by the buyers. But we're going to look at something now. I'm not saying that Euro USD will not go up. I'm saying that it's currently going up. But of course, nothing lasts forever. So let's look at the boundaries on D1. On the D1 front, it's a little bit above a kind of like a very solid resistance. When I say solid resistance, this place must have been very solid, right? So, and of course, if you look at it across, it's just, bouncing above it. So then the next resistance it will see is this one here. It will be the next resistance. That's the one that you'll be looking at. Okay. So will it get there? We shall find out. So if it gets there, it's fine. If it doesn't, it's all good. Because, like I said, and of course, don't forget that you could still get to this high. This is still a high. And that's the last high. Now, gold did something like this and broke all resistance and, of course, set a new record. So Euro USD could do that. Good. Actually do that. There's nothing in this life that cannot happen when it comes to trading. So, but what we look at is when we now zoom in, currently the daily bar today is currently the one breaking this recent, that's the last resistance standing there. So what we can do is to go to our 1-hour chart and look for perfect opportunity to enter a buy right here. To do that, we will insert a moving average to check if the price is returning to a support on it. So let's say we are using even 21. We could use 21, we could use 50. I love 50 anyway. So let me change this value to 50. 50. And then I will do, it could be simple, it could be exponential, it could be anything, it could be red. I'll do this. So on the 1-hour chart, this is very far. So I do not think that this price will return to this average today. I do not think so. So it means that you may not have the opportunity to buy your USD, except you want to do 15 minutes chart. It's possible on this one. So if you want to do 15 minutes chart, that you don't want to take too much big profit. You just want to, get in, grab some money and get out. You can use this 15 minutes chart, which means that you will need to wait now for this price to return to this average. Please pay attention. So you go to your phone if you're using phone, or you go to your laptop if you prefer laptop, and then since we have analyzed it together now, you don't need to look at D1 anymore. You've seen it. So you go to M15 on Euro USD, M15, M15 chart. And then you wait for this price, the candles printing now, to return to the average that you are seeing on the screen. Put moving average 50 on your screen, moving average 50, exponential. Put it on your screen or phone, and then wait for the price to return to the average. And once you return to it, look for a bullish engulfing candle around it, and then you can place a buy trade. What I mean by that is you look at something like this, look for something like this information here, something like this around it. So once the price returns to it, look for this kind of information, okay? Or if you cannot see that one, you see something similar, let me double click on this one and drag it. Sorry, so they want me to drag this one. You should see something like this one. These are bullish engulfing informations that support a buy, okay? Look for something like that, or something like this, okay? Something like those ones, or something like this. Even if it's settled like this, as long as it touches, or one of them touches the average, if it settles like this, it's still good. So look at this kind of information, this kind of print on your screen. So if it happens in the future that the price do something like that and it's print, bullish engulfing around it like this, okay, then you can place a buy. Comfortably place your buy, use any lot you have, depends on your account, okay. Trade responsibly according to your lot, according to your account size. Don't trade a volume that your account cannot carry. Okay, so trade, and of course, put your stop loss below the low of the engulfing formation. You should be able to grab some money. So if you want to place stop loss, then, for example, if you could place your stop loss, let us say it forms something like this. You place your stop loss around here. If you form something like that, place your stop loss with, form something like this, place your stop loss around there. Those are the areas where you can put your stop loss, all right? Just put it below the structure. Of course, you'll be good to go, right? That concludes Euro USD. Any question on that? You can drop it. So somebody says he cannot hear me. Yeah. Hold on. Really? Hello, people, can you hear me? Okay, so I think I've heard. Please, any other person in this house that cannot hear me? Any other person in the house? I don't think so. Okay, so that's okay. Now, somebody was saying something like gap up. Well, I don't know what you mean by gap up. I don't really know, but who cares about gap up? So gap can happen on the chart. It's normal for gap to happen on the chart. Okay. So if gap happens, you should know the reason why. It's because of all these trade tensions around the world. The trade war. Is it trade war or trade tariff war? I don't really know what to call it. The war with Trump. Okay. Is it trade war or tariff war? Okay. That's the thing that is currently happening in the world. Right. So that is actually giving a lot of issues right now. So that's the reason why the kind of like the gap is happening, especially on gold. If you look at your gold chart today, you must have seen gold. You must have seen the gap to the upside. So that's the reason why. All right. So let's go to the next one on the chart, which will be Euro Pound. So you could analyze the same way with Euro USD on this one also. You could just go to, for example, your chart and take it to D1. Look at the structure already. You could use anything also. You could use Bollinger Band to look at the structure. This one is still kind of like, not like the Euro USD counterpart. But of course, okay, so the price is still Euro. Of course, it's still against pound. Though there's a little bit of competitiveness on that, unlike the dollar counterpart. This one is still a little bit kind of, not as volatile as that of Euro USD, but it is still the same thing, right? So you could still look for opportunity to buy this one because the price actually tends to the upside. You could still buy this one, all right? If the opportunity presents itself, you just click on buy, right? That's for this one. I don't know who is calling me, but let me just see if I can just pick the call for a second, right? Sorry, I think I'm good with that. So let's continue our conversation. So I was saying that the Euro Pound counterpart can actually still be a buy if you want to. So you could just also go to H1 and insert moving average. All right, it could be 21, it could be anything. I like using 50, but you can also use 21. So, but based on the information that I have on this screen now, this one looks good to buy already. All right, it looks good to buy already because on the 1 hour chart, there are some kind of volatilities that are very interesting, quite interesting, range engulfing, followed by a boom. So that information there is actually in support of a buy. That information is in support of a buy. Let me show you what I mean. Let me show you what I mean. So if I insert moving average on this one now, say 21. Like I said, you can use any number you like. You can use 21, you can use 50. Okay, you can use 20. You can use anything. Whatever it gives you is what you trade. So based on this information now, we could just trade this information for a buy. So if I want to trade this one now, what I will do is that I will go ahead and do a limit order, right? I'll wait for the price to return to this region, okay, and then I'll place a buy. I'll wait for the price to return to this region of 0.8592. Okay, that's what I will do. Of course, I'll place a buy, and of course, I'll make money on this one. Soft, right? So I can go to USDHF now, same information, but inversely proportional to Euro USD. Okay, so you could just do this, the same information, but upside down. So if you look at the D1 of this one also, it's been going down, which is good because this has been going on for a while. So this is 100% bearish. So what you can do is to be looking for a sell on this one. Okay, look for a sell on this one. Then you go to H1, and then you go to maybe 21, 20, 50, whatever, it doesn't matter. Okay, so you could go to this one. I'm going to change this one to bar. So this is simple period moving average on 1 hour. And if the price is done to this average, you can buy. But if you like, you can go to M15 also and also look for a sell. Sorry, I mean sell. I meant to say sell that time. So you sell when the price returns to this region. As simple as that. So remember that this thing is actually following the price. This moving average is following the price. So if you form another candle now, it will form another average. So it will continue to trickle like that. But all you need to do is to continue to follow it. Okay, so if the average is following the price, continue to follow it until the price returns to the average. So in the future, the price prints these averages and it continues like that. Eventually, the price will return to the average. So anytime it returns to the average, you can click on new order, sell, as simple as that. So that's the opportunity for this one. The same will happen to this one also. So you can just use the same, method to trade this one also. Let me change this one to candle, and then I can also insert the average on this one. Nothing wrong with this one. All right. So on the 1 hour chart, of course, on the 15 minutes chart, this one now, for example, just left 15 minutes chart. Let's look at it. So just left 15 minutes chart with an inverted hammer, and of course, we are late. How many pips? So we should have entered sell on this candle. Okay, so now we are late about how many people? We're late about 10 pips. We are 10 pips late. So we should have been, in fact, matter of fact, we should have been taking profit by now. Okay, on a standard volume, this should have given us $100, right? So take note of that, right? Take note of that. Take note of that, right? So, do we still enter sell? Well, I don't think so, because the price has already gone into profit 10 pips against us. So I think we should just hold on for that one. Just hold on, right? So let's go to GBP/USD. For the GBP/USD front, let me look at the comments that people are dropping. If I look at that loud, I can hear you. I thought the price needs to cover the gap. Instead, we might not be able to place trade on the H150 SME. Well, I really don't know what to tell you. I really don't know, but I think we should just follow my lead wisdom, right? So I'm going to go to GBP/USD and look at the chart clearly. So I have I'm going to use this one. Remember, you can use any one. You can use any one. You can use any of these indicators. It works. Okay, so for this one, the opportunity came, we missed it. So we missed it around here, right? For the buy, right? We missed it around this region. That's when we would have entered a buy. Opportunity will come again. Opportunity will do what? It will come again. If it come again, we take it. So let's look at the D1, first of all, on the Bollinger Band front. I like looking at the D1 on the Bollinger Band front. So what I normally do is, anytime the price on the D1 is touching the upper band, I'm wearing off buy. I really buy. So now that the price is getting close to this region, I will not be looking for a buy anymore. So once it touches it, I will not be looking for a buy. I'll be looking for a sell. That's what I mean. So let's wait for this one to do what it wants to do. Of course, we can now take advantage of it. But since it's still a buy thing, it's still going 100% strong on the buy, on the bullish front. If we are following trend, we can go to 15 minutes. Even if you want to use this Bollinger Band of 15 minutes, all you need to do is to wait for the price to return to the lower band. That's all. Then you buy. Like in this instance, right? Like in this instance. All these things are very simple things to do. if you know how to trade. Let me go back a little bit. Like in this instance, those are the instances when you buy, when the price is not to the lower band on an uptrend. So the price is uptrend now, so you wait again for the price to return to the lower band on any time frame you want to buy or you want to use, even if it is 5 minutes. Okay, I don't trade 5 minutes, I don't. But even if you want to trade it, this should have been an opportunity for you to enter it back, like here. But I'm not advising for you to go on 5 minutes chart. There's no need. I don't do it. Okay, so but you can still do that. So the same thing may be, and the same analysis may just hold for AUD USD, right? AUD USD. We could just use any one. We could also use stochastic. You could use any one. If you know how to use it, it's actually very, very profitable, stochastic. But because it's an advanced strategy, we can just use the simple one we know, which could be this one, right? The opportunity to also buy this one came kind of like early, but we didn't take it, so it's gone. You can go to 15 minutes and wait again for the opportunity. So you wait until the price probably returns to this region, and then you buy. And then, so the ones for the currencies that I've analyzed so far, only 2 is for sell. USD CHF and USD JPY are 100% for sell strategy. But for the buys, we talk about Euro USD, Euro Pound, GBP USD, AUD USD, and now we stop at GBP JPY. So for the JPY, the analysis is different, right? A little bit different. In the sense that the price doesn't move like that of Euro USD and USD CHF and USD JPY and GBP USD. It's a little bit different. It's a very different ballgame. So we could use our normal template, which will be like this one that you all know, popular strategy. So, and of course, this one now has touched, I think so, touched this. You can see now that the red line is below the black, which is good for a sell. And the price has returned and touched it. But to confirm if it has touched it, we first of all check the value of moving average here. It's currently reading 188.612. So we now look at the value of the candle. So the high of the candle is 188.605. So the candle did not touch the average. Okay, that's what it means. The candle, this candle that you're looking at, even though it looks physically as if it touches it, it did not touch the average. So what I would advise for us to do is to hold on. But if you are in a haste, you can just go ahead and place sell stop below this region, below this low, below the low of this doji. Okay, there's a doji here. All right, and of course it's kind of like a short upside down, like a Jesus cross. So you can just place sell stop below it or below the low of it, and then you wait for the price to return to that region, and then you sell. Otherwise, you wait for the price to return to this upper region, and then close below that region, and then you can sell, right? So that's for GPJPY, no signal. Now, for the US 100 front, this one looks good to sell, right? So we could use this one, good to sell, right? Good to sell. And of course, we could also use this one. I like using this one for this one. I like using this strategy of 15 minutes for this one. So if you give me kind of like a sell, I will do that. So, but of course, right now, it's not giving us anything, right? It is currently not giving us anything because there's no signal right now. But it looks good to sell though. You can use any of the strategies we discussed. You can use this one, this breakout, to do the trade, right? Maybe on the 1 hour front. Of course, this one gave us a good value, like a good signal. So this one is still sell, right? So, but we need to wait more, maybe on 15 minutes for the price to go back, maybe up to the black region, and then we can sell. So this one is a sell if you see the opportunity to sell. So let me go to US30. I think it's going to read the same thing. I think so. So US30 for this one is reading the same thing. But wait, I think I have a special kind of like strategy here that can give us a kind of like a go ahead. Wow. So this one is still sell though, still sell based on all these indicators. It is still a sell, it is still on a sell trend. So you sell when the price returns to the average, and of course, on 1 hour or 15 minutes, it depends on you, even 30 minutes. Though I don't trade 30 minutes, I only trade 15 minutes, 1 hour, 4 hours, and daily. I don't trade 1 minute, I don't trade 5 minutes, and I don't trade 30 minutes. I don't, maybe because that's me. That's where my strategy doesn't work for me. Okay, so I avoid those ones. Now, for the oil price, Well, what I can tell you about oil price is that currently it is kind of like there's a gap down. So it means that oil price can still continue to be volatile to the downside. And even though Trump denied he's the one that caused the fall of oil price, we all know he's the one because of the trade war. So we can use Bollinger Band for this one to check if the price is at the support, which is not. So which means that we need to wait for the price to return to this region and then we buy. All right. So and then we go to wheat, right? For the wheat, my bias is still for buy. So I still believe that this price will go up, but I will need a clear break of this resistance. Okay, a clear break of this resistance now. We have bought already. I think we bought last week on this one, so it gave us money. So for us to continue to buy, let's wait for a clear break of this resistance region. Then we can kind of like continue to buy. Then I'll stop at gold. Now gold, my bias is 100% with the buyers. This one has really shown people pepe, right? It has given a lot of money. So this one now, let me tell you something about this gold. As far as this trade tension or trade war with Trump will continue or will persist, please, on no account should you sell gold, even if it give you a bearish engulfing. Don't. Okay, even if you see bearish engulfing bar on D1 or whatever, okay, or 4 hours, whatever, do not sell gold. Continue to look for an opportunity to buy it. Okay, because on the monthly chart, I was looking at it this morning, it's kind of surprising because even on the Bollinger Band front, gold has actually defied all odds on this one. Okay, on a normal, anytime the price touches the upper band of this Bollinger Band, like in this instance, you see that the price will definitely kind of like retrace. Okay, if it touches it again, like in this instance, it will retrace. If it touches it again, like in this instance, let's find out. Let's find out. Let's go to the front a little bit. Kind of like retracing this one. So since this region, this what do you call it now? This 2018 period, it's been kind of like not looking for a way to retrace. And of course, it touches it again here. Well, it did a little bit of retracement. Then it touches it here. It did a little bit of retracement. Then it touches it. Since this era now, let's even talk about this era. Since this era of 2023, gold has refused to even obey that call. So which means that gold is 100% to the upside, to the moon. People call it to the moon. Okay, there are some Telegram channels that I joined because of this gold. Okay, and what they were saying is that go to the moon, go to the moon. I don't know what it means, but based on what the candles are saying, you can see that for the monthly chart, there is a Marubuzu candle here, right? That tells you that the price is still going to be very strong to the upside, which is what exactly it's happening now. So we have seen 2 Marubuzus. Possibly we'll see 3 Marubuzus to the upside. These 2 guys, all right, these 2 candles are telling us that the price of gold will still be volatile. And those 2 candles broke that Bollinger Band. So I want to believe that gold price will continue to go up. But anything, right? Anything that will cause this gold to kind of like fall, like on the monthly chart now. Let's say that today is 21. Let's say something happened on this chart, right? And then the gold price continues to fall. Like I said, don't sell. Just stay away. And then it's sold on the monthly chart to the extent that this current candle turned bearish. Like this today's candle now, like this month, I'm on a monthly chart now. If this candle eventually turn red, like anything that will make this candle turn red, like red, then from next month, which is May, even if they say trade war, shouldn't bother yourself, the gold price will fall. But based on what we are seeing now, I don't see anything making gold price to drop, okay, below 3,000. So currently it's pushing to around 3,400. If you look at the high of this candle today, it's currently, the high is 3,395, which is almost 3,400. So I want to believe that between now and tomorrow, gold will hit 3,400. And for that, anytime you see an opportunity to buy, you should jump into it. For example, now if you go to H4, there's no opportunity to buy there yet. If you go to H1, there's none. If you go to M30, there's none. If you go to M15, there's none. If you go to M5, there's none. If you go to M1, there's none also. So we need to wait for that opportunity to buy. If you're asking me, what is the opportunity or where is the opportunity to buy? It is when the price returns to the lower band. Okay, that's when you have the opportunity. All right. So if I go back, for example, here, maybe here. So you could just do buy limit around the lower band. You can do that, right? Can you do that, everybody? You can do buy limit around the lower band, even if it is 1 minute you want to trade on it. So you can see this example here. You only buy when the price returns to the lower band. That's when it reaches support. You only buy when the price returns to the lower band. That's the only way you can make money. Because if you say you want to jump into buy now, it could just be that time that it will retrace. For example, now somebody bought around here. I don't know the person, but if the person bought around here, the person will be confused because immediately you buy, the price begins to go down, right? When you see it, price begins to tank. So you can just be confused that, but they said the thing will go up. Why is it not going down? So it would affect you, all right, psychologically. That's why I said for you to avoid that, you need to buy when the price returns to support. I'll stop there, and of course, I'll wait for you for your input at this junction. So let me read the comment section to see what people are saying. So somebody is saying, can you use 3 indicators at the same time for clarity? Of course, yes, just wrong. You can do that. You can use even 5, you can use 10. Sometimes I use more than 3 indicators as well. I look at a lot of things before I decide on buyers. I look at different time frames. Okay, I look at different indicators, and then I make an opinion. All right. Even today, before I come to this discussion, I've been in the office now for the last maybe 1 hour. I got here around 7:30. So just for this class, so I started preparing, looking at the charts to see which to bring forward and which not to bring forward, because you can't do everything right. You're wrong. So you can use more than 3 indicators. Another question? Another question? Let me listen to questions. If there's no question and I've not looked at what you want me to look at, please indicate. All right, indicate. Let me look at what you want me to look at. Of course, we can close the class. Who want me to look at something? Drop what you want me to look at in the comment section. I'll look at it right now. Drop what you want me to look at. 5 and 1 minute is not good for scalping. Of course, it's good though. Those who that do scalping, they use 5 minutes and 1 minute. I don't do scalping. I don't have the heart to do it. Because I don't want to be, I can't be with the chart all the time. All right. That's why I don't do scalping. So if you want to do scalping, you scalp between 5 minutes, 1 minute, and 15 minutes. So you go 5 minutes, 1 minute, 15 minutes, 1 minute, 5 minutes, 15. Those are the time frame that scalpers use. Even if you go to YouTube, that's what they will tell you. But because I don't do it, I cannot give you an opinion on it. So Adeyemi want me to look at US 2000, which is the same thing as US 100. Why do you want me to look at it? I just analyze US 100 and US 30. They should give you the same thing with US 2000. Look at it here. Adeyemi. Look at US 2000. That's US 2000, right? Look at US 30. Wait, let me go to, yeah, I think I can still do default. So if you look at this, if you look at this US 30 and you look at US 2000, you can see that they are the same thing. Okay, they form the same thing. So, Adeyemi, there's no need to look at US 2000. But of course, since you want me to look at it, and of course, it's because it's open, I will tell you my opinion. What I feel is that the price will still continue to drop, most likely. But I'm afraid to say for this US 2000, because there's something here now that we're looking at. There's still this double support. So as long as this double support hold, there's no way this US 2000 will fall below this level. So if this double support hold, then you can count on it that this one will not go down that much. All right. So for that, US 2000, you can still continue to look for sell until you hit that rock bottom, which is that double bottom. All right. If the opportunity presents itself on maybe Bollinger Band or what they call it now. What can I say now? Maybe Bollinger Band or moving average. Okay, any of the two. So you could use this one, for example, because this is 1 hour, right? So let's look at 30 minutes on this one. Okay, let's look at 15 minutes on this one. Okay, so on this 15 minutes now, I think this one is telling us to sell, like right now. That's what it's saying. This year 2000, I mean. For this 15 minutes, we've seen clearly that the price is back to that same level and they are just close below it. Look at it here. So we have this low. We have this low, right? Let me drop it in. And then the candle has already closed below it, so we can just sell. That's what this one is saying. That's what it's saying. So on this one now, if we sell, we put our stop loss above this high. Put our stop loss above this high. Okay. And then we can just enjoy it. And you can put the profit as much as you want. So on this one now, let me just click on new order. And if it permits me, I'll just sell. Now I've sold. Then I'll go ahead and put my stop loss above this high, right? Above that region. That's what I would do. Okay. That's where my stop loss will be. My take profits can be anything. All right. It can be anything. Be anything. Anything. Right. That's what I would do. So far, the one that I've been able to do right now is US 2000. That's the one I've been able to do, and I've put stop loss and take profit on my trade. Okay, my trade actually set based on our analysis. And of course, remember this is for education purpose only. So you might want to, if you like, you might want to place a sell or ignore. It depends on you. And if you want to do it, you can do it on demo so that at least it will be fair enough so that you can test whether the strategy work or not. That's what I'll stop for that one. Any other question, any other comment, any other contribution, or we can just close the class now and enjoy our holiday, because we are still on holiday mode, so we don't have to do 1 hour before we close the class. We can just do a little bit of analysis and close. Any other contribution? Please explain Bollinger Band and stochastic. Neutral. Okay, so it's simple. We go to Bollinger Band and stochastic together. For example, even on this US 2000, we can just apply Bollinger Band and stochastic. So I think I have a template for that. What I will do is I will first of all put Bollinger Band, right? Then I will put stochastic to join it. So I'm going to go to insert, oscillator, and stochastic. Stochastic. Right. So I'll just do default. So you don't need to change anything, just default. And then you do okay. So what this one is saying is that Bollinger Band theory says that you can sell, according to me, right? That you can sell around upper band and buy around lower band. But that you should follow trend. So because the trend is down, we want to be selling around upper band, right? That's what we want to be doing. But now we want to also add an indicator, which is stochastic. So stochastic, we say you should sell when you are beginning to have a higher high, when the price is having a lower low. Okay? Sorry, yeah. Higher high. Higher high against lower high. So the price is doing lower high. Let me show you what I mean. Price is doing lower high, like here. There's a high here, right? And then there's a high here. And then there's a high here. So the price is doing lower high, right? But if the stochastic is now doing higher low, then you can sell when the price begins to cross the lower side. So you now check the highs of the stochastic. So this is a high for stochastic. This is a high for stochastic. All those periods. And this is a high for stochastic. So according to this information on this stochastic now, the price is still doing lower high with the price, with the indicator. So the indicator is still doing lower high and the price is doing lower high, which means that the stochastic is not telling you to sell until you now begin to see higher high, okay, on stochastic. So for example, now if the stochastic is now printing highs that is higher, like something like this, okay, something like this, and another one that is higher than that, maybe something like this. Let me print another one, maybe higher, right? I don't know where to put it. Safe. Something higher, like, okay, let me see if I can do something like this. So if you're now beginning to have higher highs on the stochastic like that, and then the stochastic cross to the downside on the higher high, then you can place it you can place a direct sell on the chart. That's how to use stochastic, right? And Bollinger Band. That's how you can combine the two to trade. Okay. Any other question on this one? Or you can just speak to me one-on-one. Maybe I can just explain better. I do a video on it. So I noticed you always put wider stop loss on your trade. I thought TP should be higher than stop loss. Well, Eddie, you see, it's a kind of like a choice. There's something in the market that I know. Okay, patience and time win all in this market. The only way you can get patience and time is to give it value. Okay, give it room to grow. Okay, so for this, for example, now on this trade now, let me clean up this ones and come back here. And because I use a particular indicator, which is, I think it was this one, yeah, or this particular 15 minutes time frame. So there's a rule that guides this stop loss. There's a simple rule that guides it. One of the rules that guides it is that because I'm trading this particular indicator, my stop loss, if I enter a trade at all, my stop loss cannot be below the black line. Please note that. Eddie, hope you are following me now. Eddie, please confirm to me you are following this particular conversation. Just say yes that you are following. So the first rule of this particular indicator that I have here, is that you cannot put your stop loss below the black line. So I would have loved to use this level as stop loss, but because the rule says that I cannot put stop loss below the black, then I have to shift it to the upside, right? Let me double click and shift it. So I have to shift it to the upside, and I cannot put it in a vacuum. I have to put it above a recent high. And the only recent high I have here is this one. So I have to put my stop loss above this level. That's number one. So that's where the stop loss should be. Or it could also be higher because it's allowed. You can also put your stop loss higher. It's allowed. It's all allowed. But because I don't want to risk too much, I put my stop loss here, right? Now, the next thing is take profit. So take profit can be anywhere, right? You can do 1 to 1, you can do 1 to 2, you can do 1 to 3, you can do 1 to 4, you can do 1 to 0.5, you can do 1 to anything. So take profit is up to you. All right. So that's only one that you can the one you can control is take profit, is stop loss. The one you cannot control is take profit, because the price can just give you a surprise and dip very fast to the downside. Okay, it can go down, and of course it can just do small things. For example, now this price can go, let me use cross here. The price now can leave where it is now, come down a little bit into profit, which is profit, right? And then begin to turn back and go up and hit the stop loss. What will you do? Nothing. So you need to give it room to grow. The only way you can give it room to grow is to ensure that you give it enough stop loss gap, so that even if it goes up and play, because the price can play around, even if you play around, it shouldn't really see your stop loss. Anything that makes this price see your stop loss, you have tried. That's the whole idea of stop loss. Anything that will make this price push back up and hit your stop loss, then it means that you accept the loss 100%, because now you have tried all you could to avoid the stop loss, and yet the price hit the stop loss, which is allowed, right? So you accept that loss. But if in the course of wandering, the price wander around, maybe something will happen, and of course it will be this black line, because that's your last safety net. The black line, which is your moving average, is your last resistance. So if you hit anything that will make the price break the resistance, to mean that most likely it will hit the stop loss. But if you hit this black line, the black line can resist the price. And of course, if you resist the price, it will just drop the price to the downside. And of course, to go and hit your take profit. Now, guess what? The price doesn't have to hit your take profit. No, not at all. So the price could just, be in profit for like this level. And then once it gets to like maybe 10, 20 pips, what do? You move your stop loss towards to break even. You can drag your stop loss down to break even. You just drag it inside and drop it. That's what you do. Okay, that's how to trade, right? I think I've exhausted my discussion, but I hope that I hope that you understand, and every other person listening, which is a very good place to stop so that I can go back and enjoy my holiday. Any other question in the course of that? No question. Okay, so let me open the floor for one person to speak to me. And of course, you also tell me where you went to for the holiday. Maybe I can even join you if you're in Lagos. Okay, so who wants to go first? You want to go, you raise up your hand. Of course, that's if you want to talk to me. Just one person. Of course, we'll close the class. But if there's nobody, we can also close the class. Okay, to close the class. Oh, Yusuf Abdul Kadiri. All right, Yusuf, what's up, Yusuf?
Yeah, good morning, Mr. Shegun.
Good
How are you
morning.
doing?
I'm doing well.
Yeah, thank you.
Thank God.
Happy Easter to you, sir.
Happy Easter, happy holiday, happy everything for all of us, to all of us.
Thank you. Yeah, I'm speaking from Ilorin. So I would like to ask, concerning the markets, I noticed something on Thursday because of the Good Friday. I did not anticipate that there is going to be holiday, so markets will close. So I have entered a trade since then. So I would like to ask this, that if there is holiday like that and the market close earlier, apart from the weekends, what would be the advice if the trade has already been entered and you are on a negative? So what is the right thing to do if the market eventually now open by Monday, like today?
Well, if the market open, it's just like, the market off, which is Saturday and Sunday, or like in this case now, Friday, because of the holiday, it's just the market pausing. It will continue on Monday. So if you are negative and you believe that your price or the price is according to your analysis that you should respond, why not? You leave your trades open. But if you're not comfortable with it, you can just close your trade and move on. Do you know, Yusuf, that there are some people, traders, that don't leave their trade overnight, whether profit or loss? Why? Because they avoid a lot of things. First of all, they avoid swap. That's one. Two, they don't know what will happen the next day. They don't want to know what will happen the next day. And those are the people that normally trade daily bar. They trade D1. Okay. So whatever D1 gives them is what they follow. So they trade when the market open in the morning, around 12 o'clock or 1 o'clock in the morning, they place trade. And when the market is closing by like 9 p.m. in the evening, they close it. So if they believe that the trend is going down, okay, for example, USDJPY now. Let's go to that USDJPY and look at it. What they do is for example, now somebody may believe that USDJPY is going down, okay, and then we go to D1 now. So because they are trading sell, because they believe that the trend will continue to go down, they will be placing a sell trade. So for example, now they would have placed a sell trade, and they will only close it because they would have placed a sell from, for example, here now today at the open of the trade, they will place a sell like here. Now they are in profit, and they will not close the trade until evening around that kind 9 p.m. So whatever the price gives them at that level, they collect it and close their trade and bye-bye for the day. So those kind of people will not be in this kind of your situation whereby you're not saying, the market closed on Friday against me. What happened on Monday? I'm confused. They will not be confused because they are clear as to what they want to do. For example, now, if you are that kind of trader and you have been trading since, for example, since this market turned bearish. I think it turned bearish since around, let's find out, maybe since around here when there's this bullish or bearish engulfing. So they would have been placing sell. So sell on this day. Let's look at this arrow. So sell on this day. Okay. They made money, maybe. Sell on this day, they lose money. Sell on this day, they make money. Sell on this day, they make money. Sell on this day, they make money, right? Sell on this day, they lose money. Sell on this day, they lose money. Sell on this day, they lose money. That's 3 loss in a row. Sell on this day, they make money. Because they believe that there's a sell, right? That the trend is changing. Sell on this day, they lose money. Sell on this day, they make money. Sell on this day, they make money. And so on and so forth. Hope you understand. So you can do that if you like, but I don't trade like that. Like, I'm just saying that practically, not in theory. I've seen people do that. I belong to some forums online, and this is what they do. They trade daily bar. They don't trade any other bar, only D1. But they don't leave their trade overnight. So if you are scared of leaving your trade overnight, you can close your trade before the market close, like 5 minutes to close. You accept profit or loss, so you accept it and then you move on. Otherwise, you allow the trade to run even the next day. So if your trade is still running now, and it's according to your strategy, leave it, or you use stop loss. Until stop loss is hit, you cannot close the trade. Yusuf, is that clear?
Yeah, very well. Thank you.
Thank you very much. Thank you very much. Let me allow one more person in the spirit of holiday to speak to me, and that would be Ayun Felix. Mr. Felix, what's up? How is Akure?
Good morning, sir.
Good morning.
Yes, a happy celebrations to you. How was your trip back to Lagos?
We thank God, we thank God, we thank God.
I just say my greet you. Thank you, sir, for all you do.
Thank you very much. Thank you very much. Thank you very much. Yeah, so thank you very much, everybody. It's a good place to just, give it a stop. Of course, I'll see you on top. Please trade safe and stay safe. So it's 2 things now. You stay safe because it's holiday. You don't need to go out, right? You don't need to go to the bar to drink beer. There's no need. Right? Remember, only poor people drink beer. Rich people don't drink beer. You're a rich man. As a trader, you're a rich man. All you need to do is to, buy a wine, very nice one, sit in your sitting room, open to your television and enjoy the holiday. Listen to what the people on the world is saying and Of course, if you know how to read, you can open your book and read it. If you know how to trade, you open your chart and begin to study. That's what it means. All right. Otherwise, bye-bye. Thank you, everybody.